It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
It's the Real Estate Breakfast, back for another weekend of musing over what is happening in the property market. I hope that you've got a chilled out weekend coming up. And with over 1,000 episodes, and just like medicine, it's your daily dose of property news. And we're doing that 7 days a week. You can stream us anytime on iHeartRadio, Spotify, Apple Podcasts and Amazon. It is a Saturday morning, 1st of February today. And good morning to Jason up there in Darwin listening. You're about to purchase, you say, a house by March, you're hoping. And thank you for the invite and the beer invitation. Appreciate that. In fact, I don't drink beer. I don't drink any form of alcohol, but a nice latte, that'd go down a treat. And also we heard from you, Wendy, another listener in Adelaide, who with your sister, you're hoping to buy an apartment. And you asked if we could highlight the latest apartment Adelaide market situation. So we'll do that for sure. Keep on listening. And if you'd like to get in touch with us, don't forget the email address is myrealestatepodcast@gmail.com. Now, recent CoreLogic data has uncovered a striking trend. This is from a few days ago. The price gap between a typical unit and house in Sydney has grown. I think we can all agree that units are expected to be cheaper than houses. It's how people really do get that first step onto the property ladder. However, the gap between a house and a unit is now more than 5 times the price, and that's happened over the last 2 decades. Upsizing has never been more difficult in Sydney's property market than right now. You might have experienced that firsthand. So on our Saturday morning, let's take a bit of a dive into the impact of this widening divide and the challenges facing buyers. And joining us once again is Anthony Landahl. He is the Managing Director and Mortgage Broker there at Equilibria Finance. Good morning to you, Anthony. First off, where did January go, mate?
Yeah, good morning, Craig. Great to be here, mate. And January flew past. It's typically holiday season over here in Sydney on the eastern seaboard. A lot of people enjoying some time by the beach with family and friends. But yeah, it flew past. And let me tell you, and all of the listeners, I think we've had the busiest start to the year in terms of people looking at getting in the market that I can remember over the last 3 or 4 years. It has not stopped since we've been back with new inquiry, which is fantastic.
Yeah, I am actually hearing that from other real estate agents as well. So we should look at this price gap between houses and units as mentioned. It has now expanded more than 5-fold over the past 2 decades. Let's look at some of the key insights and takeaways the data has revealed about this growing price disparity from your point of view.
Yeah, it's really topical here at the moment. And I think tacitly everybody knows it's been harder and harder to purchase a house and people have been looking in different areas. But some recent data that's come out from Domain and CoreLogic has really identified and highlighted the challenges, not only for first home buyers, but as you said, for upsizers. The difference in price now between a typical unit and a house in Sydney is now an eye-watering $610,662. So houses at the end of December 2024 were 71% more expensive to buy than a unit, which is quite extraordinary. So Sydney's median house price is now $1.47 million. It's almost double the median unit price of $859,963. And just to step back for some historic perspective, the gap has increased more than 5 times in the past 2 decades. In 2004, the median house price was just $106,208 more than a typical unit. And as just mentioned, the median house price is now $610,662 more than the median unit price in Sydney.
One of those out-of-control situations that the metro market of Sydney has. Of course, recently CoreLogic estimated that the total value of the Australian residential real estate market was 11.1 trillion, with outstanding mortgages accounting for around 2.3 trillion. That is resulting in a low overall loan-to-value ratio of 21%. Residential property, now that makes up 56.3% of the total household wealth. It's a key reason why a market crash is unlikely. And the pandemic, we're still working, aren't we, Anthony, through the pandemic, the recovery, of course, the prices that skyrocketed. It's always a question that people are asking, do you see this gap narrowing anytime in the future?
Look, in short, I don't particularly see a narrowing of that gap. What we have seen in Sydney is a slowdown in the growth. We saw incredible growth through the pandemic, as you've just indicated. We've seen a slowdown in growth. That chronic shortfall between supply and demand, that mismatch, isn't suddenly resolved. And what we're seeing is more development, more investment in units, in townhouses, in higher density living, which is going to bring more supply on the market, as distinct from areas that are building more and more houses. So I think we're going to see that gap either staying fairly similar as it is, or in fact widening even more. There's no silver bullet here to solving that.
It is the weekend. It is our Saturday morning. We are talking with Anthony Landahl. When we come back, we'll be looking more into the Sydney property market. We'll do that next.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
A number of individuals whom I know who have been displaced from the Palisades fire, is just making sure that they were okay, offering, other services, food, blankets, anything they might need. They basically were given very short notice to pack up their belongings and to leave.
Now, you've been there for some time. How surprising was what unfolded to you as you first started watching it unfold, news reports, television, etc.? How much of a gobsmacking scenario was that when you actually saw it?
Oh, yeah. So I was actually sitting in my office and I can see Malibu and the Palisades. I noticed a big plume of smoke coming over. And sure enough, it was a fire. It started out as a regular fire, but we were talking about 60 to 80 mile per hour winds swept it through the neighborhood. Days later, it became apparent that the entire neighborhood was gone.
We don't just report on real estate news, we take you to the source of the information. We produce more property podcasts every week than anyone else. We are your trusted guide for all things real estate.
And it's a Real Estate Saturday here with Anthony Landahl. And 2025 is going to be another year, probably fair to say, of navigating your way through it to try and secure a good result with some of these external factors at play that could, let's face it, they could upend the apple cart, especially for first-time buyers and those looking to upgrade, because this year nothing is a given, Anthony.
No, nothing is a given. I think we are seeing some increased supply. We've seen a slowdown in the market, and I think our levels of inquiry from both owner-occupiers and investors are indicating people are seeing opportunities. This recent data, the gap that's widening between houses and units, is impacting people's behaviour, whether it's a first home buyer or an upgrader. So people are changing what they're looking at doing. Some people are moving interstate, looking for new jobs. They just are priced out of the housing market. Others are investing elsewhere. People might now look at renting in the suburb they wish to live and purchasing in a suburb as an investment. There's a lot of challenges out there. First home buyers are essentially, with this new data coming out, being priced out of buying a home unless they have a significant cash gift, a large deposit, or a good, strong dual high income. So that's a massive challenge for first home buyers to buy a house as distinct from a unit. And the widening gaps are also impacting upsizers. Often an upsizer might buy a unit, then their family's growing, they look at selling the unit, using some of the funds from the sale of the unit to seed the purchase of a house. But this widening gap is making that prohibitive, where the gap between a unit and a house and the funds from the sale of the unit or the equity in the unit is making it almost impossible to go straight from a unit to a house in some regions. The way people are behaving, the sort of properties they're looking at is changing and evolving, even with that more stock coming onto the market.
Yes, there's no doubt that the Sydney property market takes up a lot of the oxygen when it comes to real estate. The escalating prices that you're talking about, people simply just can't get ahead of the upwards curve, and that's despite numerous government initiatives. There still seems to be no real solution to Sydney's ongoing housing shortages. I can hear the frustration coming through at your end. It's with everybody at the moment. The question, of course, is do we just accept that and deal with it the best that we can? So what are your thoughts around that, Anthony?
I think what we're seeing is a shift in mindset. People are looking at living in other areas. They're looking at moving to commutable areas. They're looking at a different type of property that maybe they looked for a couple of years ago. But as an asset class and as that great Australian dream of owning a home, I still think that aspiration is fundamentally there, whether it's owning an investment or whether it's owning a home to live in. That aspiration to own bricks and mortar is absolutely still there. But there is no silver bullet, whether it's local council, state government or federal government. There's no silver bullet to this solution. And even according to some recent reports, Sydney's facing a shortage of over 190,000 homes. And the government targeted trying to build 1.2 million homes over the next 5 years. Since the 1st of July 2024, when it started, 45,000 homes have been built. There's projection of needing to build 173,000 homes in the first year, and we're going to be 67,000 homes short of what's needed. So we're a long, long way off solving this chronic housing shortfall. We've got high levels of immigration. We've got red tape bureaucracy. We've got disincentive for developers, and we've got government programs that aren't delivering, and people are adjusting where they want to live, how they live. But I still believe fundamentally that aspiration to own bricks and mortar is there.
Yeah, it's something that we're going to be talking about and talking non-stop during 2025, all about the bricks and mortar and the way that people are going to navigate through 2025. Anthony, enjoy your weekend. Some great points there. And catch up with you in a couple of weeks' time.
Thanks very much. Have a great weekend, everyone.
It's the Real Estate Podcast, talking properties from 6 a.m. every day, from every corner of the Australian real estate market. We connect you to the best real estate information across Australia. The Real Estate Podcast.